Imagine receiving an invoice from a company you regularly do business with. The logo looks right. The bank account details seem legitimate. The amounts match previous transactions, so you pay it. Except the invoice is fake. The bank account belongs to a criminal. And you just sent millions of dollars to a stranger halfway around the world. Now imagine you're not just any company. You're Google or Facebook, two of the most technologically sophisticated corporations on Earth, with some of the smartest people in the world working for you. And you still fell for it. Between 2013 and 2015, a Lithuanian man named Evaldas Rimasauskas pulled off one of the most audacious corporate frauds in history. He didn't hack into systems, he didn't steal passwords, he didn't use sophisticated malware or zero-day exploits, he just sent fake invoices. And Google and Facebook paid him $122 million. Think about that number. $122 million. Not through complex technical hacking, not through insider access, just through paperwork, forged documents, and the exploitation of basic corporate processes that exist at every company in the world. This story isn't about cutting-edge cybercrime. It's about something far more terrifying. How simple social engineering and fraudulent paperwork can defeat even the most advanced corporate security systems. It's about how the weakest link in any organization isn't the technology, it's the humans. Today, we're diving into exactly how Rimasauskas did it, why it worked so spectacularly, how he got caught, and what this reveals about vulnerabilities that exist at every company, including maybe the one you work for. Because here's the uncomfortable truth. If it happened to Google and Facebook, it can happen to anyone. Evaldas Rimasauskas wasn't a computer genius. He wasn't a hacker who could breach firewalls or crack encryption. He was a 48-year-old Lithuanian man who understood something fundamental about how large corporations work. They process thousands of invoices, and humans make mistakes. His target was brilliant in its simplicity. Both Google and Facebook had legitimate business relationships with Quanta Computer, a major Taiwanese electronics manufacturer. Quanta produced servers, components, and hardware that tech companies needed. They were a real, established supplier with years of transaction history. Rimasauskas realized that if he could impersonate Quanta Computer convincingly enough, he could send fake invoices to Google and Facebook, and their accounts payable departments might just pay them without thoroughly verifying every detail. But impersonating a major corporation isn't simple. You can't just send an email saying, "Hi, we're Quanta. Please pay us $10 million." Corporate fraud requires layers of legitimacy. So Rimasauskas got to work building his elaborate deception. First, he registered a company in Latvia with a name nearly identical to Quanta Computer. The name was close enough that at a glance, especially in corporate paperwork with different language characters or formatting, it looked legitimate. He couldn't use the exact name, that would be too obvious, but something similar enough to pass casual inspection. Then he opened bank accounts in Latvia and Cyprus, under this company's name. These accounts would receive the fraudulent wire transfers. By using European banks, he added another layer of apparent legitimacy. These weren't obscure offshore accounts in money laundering havens, but accounts at real banks in EU countries. Next came the forgeries. Rimasauskas created fake invoices, contracts, and correspondence on letterhead designed to look like official Quanta Computer documents. He studied real Quanta invoices to match the formatting, the language, the technical specifications. The invoices had to be convincing enough that someone quickly reviewing them wouldn't spot the fraud. He also forged letters purportedly from Quanta executives confirming the legitimacy of the transactions and the bank accounts. These letters used forged signatures and corporate stamps to appear authentic. Then came the crucial step, establishing contact. Rimasauskas didn't just blindly send invoices hoping someone would pay. He researched the organizational structures at Google and Facebook. He identified people in accounts payable, procurement, and finance departments. He learned their email formats, their processes, their approval chains. He created email addresses that looked like they came from Quanta Computer employees. Not exact matches, that would get filtered by email security, but close enough. Maybe replacing a letter with a similar looking character, or using a domain that was one character different from the real Quanta domain. And then he started sending invoices. The genius of the scheme was its patience. Rimasauskas didn't immediately ask for $122 million. He started with smaller amounts that wouldn't trigger excessive scrutiny. Invoices for amounts that matched typical transactions between these companies and their real supplier. He built a pattern of normal activity. The invoices referenced real projects, real purchase orders, real contract numbers, information he'd gleaned from studying the relationships between Google, Facebook, and the real Quanta Computer. Each invoice looked like a routine payment request for hardware and services actually being provided. When questions arose, and they did, Rimasauskas had responses ready. He'd send follow-up emails from his fake Quanta accounts confirming details, providing additional documentation, even setting up phone calls. He played the part of a frustrated vendor just trying to get paid for legitimate work. Between 2013 and 2015, the invoices flowed steadily from Rimasauskas to Google and Facebook. The payments department at Google would receive an invoice. It looked legitimate, right format, right logo, amounts that seemed reasonable for hardware purchases. It referenced existing contracts and purchase orders. The bank account information appeared to be from Quanta Computer. So they paid it. The same process happened at Facebook. Invoice arrives, looks legitimate, matches expectations for their relationship with Quanta, payment gets approved and processed. Wire transfers would arrive in Rimasauskas's Latvian and Cypriot bank accounts. At first, smaller amounts, hundreds of thousands of dollars. When those payments went through without issue, he got bolder. Millions per invoice. The money didn't stay in those accounts long. Rimasauskas quickly moved the funds through a network of bank accounts across multiple countries. This is called layering, making the money trail so complex that tracing it becomes nearly impossible. Funds would go from Latvia to Cyprus to various other locations, getting split, merged with other transactions, converted between currencies. Some money was used to buy property. Some was invested in businesses. Some simply disappeared into the global financial system's maze of transfers. And the scheme kept working. Here's what's remarkable. This wasn't happening in some small department of a mid-sized company with lax controls. This was Google and Facebook, companies that pride themselves on innovation, efficiency, and security. Companies with sophisticated financial controls, audit procedures, and fraud detection systems. But those systems are designed to catch technical fraud, unauthorized access, duplicate payments, payments without corresponding purchase orders. Rimasauskas's invoices had corresponding purchase orders, forged but present, matched expected vendor relationships, and came through proper channels. To the automated systems, everything looked fine. And when humans reviewed the transactions, they saw what they expected to see: invoices from a known vendor for expected services. This is the power of social engineering. Rimasauskas didn't need to hack systems because he hacked people. He exploited the fact that busy accounts payable employees process hundreds of invoices daily. They're looking for red flags, but when everything appears normal, right vendor, right amount range, right documentation, they approve the payment and move to the next item in their queue. The longer the fraud continued, the easier it became. Once the fake bank accounts were in the system as legitimate payment destinations for Quanta Computer, subsequent invoices to those same accounts raised no additional flags. The fraud became normalized within Google's and Facebook's payment processes. By 2015, Rimasauskas had successfully stolen approximately $100 million from Google and about $22 million from Facebook. $122 million total. But every con eventually falls apart. And Rimasauskas's downfall came from the same place most frauds are discovered. Someone finally noticed something wrong. The exact trigger isn't fully public, but investigations suggest that the real Quanta Computer may have noticed something suspicious. Perhaps they learned that Google or Facebook believed they'd been making payments that Quanta had no record of receiving. Or perhaps internal auditors at Google or Facebook noticed discrepancies in their payment records. However it started, once someone began pulling the thread, the entire scheme unraveled quickly. Investigators discovered that the bank accounts receiving payments didn't belong to Quanta Computer. They found the forged invoices, the fake email addresses, the shell company in Latvia. They traced wire transfers through multiple countries and found that enormous sums had been paid for services never actually rendered. In 2017, the US Department of Justice charged Evaldas Rimasauskas with wire fraud, money laundering, and aggravated identity theft. The indictment laid out the entire scheme in detail: the fake invoices, the forged documents, the shell companies, the bank accounts. But Rimasauskas wasn't in the United States. He was in Lithuania. And getting him to face justice would require international cooperation. The wheels of international justice turn slowly, but they do turn. In March 2017, Lithuanian authorities arrested Rimasauskas based on the US indictment. He fought extradition, arguing through his lawyers that the charges were unfounded, that he was being scapegoated, that his prosecution was unfair. He lost. In August 2017, Lithuania approved his extradition to the United States. When Rimasauskas arrived in New York to face charges, he encountered the full weight of the US criminal justice system: wire fraud across state and international lines, money laundering on a massive scale, aggravated identity theft. These are serious federal crimes with severe penalties. Faced with overwhelming evidence and the prospect of decades in prison, Rimasauskas made the pragmatic choice that most criminals in his position make. He pleaded guilty. In March 2019, he pleaded guilty to 1 count of wire fraud. In exchange for his cooperation and guilty plea, other charges were dropped. But even with a plea deal, the penalties were severe. In December 2019, a federal judge sentenced Evaldas Rimasauskas to 5 years in prison. He was also ordered to forfeit $49.7 million, the amount that could be recovered and traced. He was ordered to pay restitution of $26.5 million to the victims. 5 years for stealing $122 million. Let's think about that math. Even accounting for the money recovered and restitution ordered, Rimasauskas potentially still came out ahead, assuming he successfully hid significant portions of the stolen funds where investigators couldn't find them. This raises uncomfortable questions about whether the punishment truly fits the crime. A person who robs a convenience store of $500 might get more prison time than someone who defrauds corporations of over $100 million. But there's another angle to consider. What happened to Google and Facebook? For most companies, losing $122 million would be catastrophic. It would mean layoffs, bankruptcy, total collapse. For Google and Facebook, it was embarrassing, but not financially devastating. Google's parent company Alphabet had revenue of $66 billion in 2014. Facebook had revenue of $12.5 billion the same year. The $122 million was a rounding error in their annual revenues. Expensive, yes. Embarrassing, absolutely. But not existential. What hurt more than the money was the reputational damage. These were supposed to be the smartest, most technologically advanced companies in the world. And they got tricked by fake invoices, a scam that's been around since commerce began. Both companies were quiet about the fraud initially. Neither publicly acknowledged it when it happened. The details only became public through Department of Justice filings and court documents. Even then, Google and Facebook didn't issue major public statements. They preferred to let the story fade away quietly. They did, however, recover some of the money. Working with law enforcement and following the money trail through international banks, investigators managed to freeze and recover approximately $49.7 million. But that still left over $70 million unaccounted for. Where did that money go? Some was certainly spent: property, investments, luxury goods. Some may be hidden in accounts investigators never found. Some was probably moved so many times through so many jurisdictions that tracing it became impossible. Rimasauskas served his time and was eventually released. He's now back in Lithuania, presumably much wealthier than when he started, even after forfeitures and restitution. Now here's where the story gets more complex and, frankly, more interesting than just clever criminal steals from big companies. Who are the real victims here? On the surface, it's obviously Google and Facebook. They lost $122 million combined. But as we discussed, that amount, while huge in absolute terms, didn't seriously harm these corporations. They had insurance. They recovered some funds. They wrote off the losses. But think about everyone else affected. The real Quanta Computer had their corporate identity stolen and used for fraud. Their reputation was potentially damaged by association with a massive scam, even though they were victims too. They had to deal with the confusion and complications of explaining to partners that the invoices weren't from them. The employees at Google and Facebook who processed those payments, some of them probably faced serious consequences. When a $122 million fraud goes undetected for years, someone takes the blame. Accounts payable staff might have been fired. Managers might have been demoted. Audit departments faced scrutiny. These were likely people making average salaries, doing their jobs according to procedures they were given, who became scapegoats for institutional failures. Did Google and Facebook have inadequate vendor verification processes? Yes. Did individual employees fail to catch the fraud? Also yes. But who pays the price? The taxpayers of multiple countries funded the international investigation, prosecution, and imprisonment of Rimasauskas. The FBI, Department of Justice, international law enforcement, these resources cost money. And then there's a broader question about what this fraud reveals about systemic vulnerabilities. The Rimasauskas case wasn't unique in its methods, just in its scale. Business email compromise scams, fake invoice fraud, vendor impersonation schemes happen every single day. The FBI's Internet Crime Complaint Center reported that business email compromise scams caused $2.4 billion in losses in 2021 alone. That's billion with a B in a single year. After the Rimasauskas case became public, both Google and Facebook presumably strengthened their vendor verification processes. Maybe they implemented better controls around bank account changes. Maybe they added verification steps for large payments. Maybe they improved training for accounts payable staff. But here's the thing. These same vulnerabilities exist at thousands of companies. Small businesses, mid-sized firms, even other large corporations. Most don't have Google's and Facebook's resources for fraud detection and prevention. If you work in accounting or procurement, this fraud should terrify you, because it could happen at your company tomorrow. Someone could impersonate one of your vendors right now. They could study your processes, your personnel, your vendor relationships. They could craft convincing fake invoices and send them through channels that look legitimate. And if it can fool Google and Facebook, it can fool your company too. The Rimasauskas fraud succeeded because he understood human psychology and exploited organizational weaknesses. He wasn't smarter than Google's and Facebook's engineers. He was just more patient and more willing to exploit the gap between how systems should work and how they actually work. So what's the real lesson of Evaldas Rimasauskas and his $122 million fake invoice scheme? It's not that Google and Facebook are incompetent. They're not. They're highly sophisticated organizations with smart people and good systems. It's not that invoice fraud is some new, cutting-edge crime. It's not. It's one of the oldest scams in business. The real lesson is this. The weakest link in any security system is human trust. We want to trust that invoices from known vendors are legitimate. We want to believe that established processes work. We want to assume that if something made it through initial checks, it's probably fine. And criminals exploit that trust. Rimasauskas spent years building his scam. He studied his targets. He created layers of legitimacy. He was patient, starting small and building up. He made his fraud look normal, and it worked spectacularly. He stole $122 million using nothing more sophisticated than fake letterhead. forged signatures and email addresses that looked almost right. No hacking, no malware, no technical sophistication at all. Just paperwork and psychology. 5 years in prison for $122 million. Even with forfeitures and restitution, he likely came out ahead. And the companies he defrauded were embarrassed, but ultimately fine. The real lesson went largely unlearned by the business world. These scams continue every day, at companies large and small, because the fundamental vulnerabilities remain. If you work in finance, procurement, or accounting, this story should change how you look at every invoice. That routine payment to a familiar vendor. Verify it. That urgent request from a supplier. Call them directly. That small change to bank account details. Confirm it through multiple channels. Because somewhere right now, another Rimasauskas is studying another company. They're learning the processes, identifying the vulnerabilities, crafting the perfect fake invoice. The question isn't whether these scams will continue. They will. The question is whether your company will be ready when one lands in your inbox. Evaldas Rimasauskas proved that you don't need to be a technical genius to steal millions. You just need to understand that businesses run on trust, and trust can be exploited. Google and Facebook learned that lesson the hard way, $122 million at a time. What will it cost your organization to learn the same lesson? In an age where we worry about sophisticated cyber attacks, zero-day exploits, and AI-powered hacking, remember that sometimes the most effective attack is also the simplest: a fake invoice, an almost right email address, and the assumption that because something looks normal, it probably is. That assumption cost two of the world's most advanced technology companies $122 million. What will it cost you? $122 million stolen with nothing but fake invoices. If Google and Facebook can fall for it, so can your company. Hit that like button if this story changed how you'll look at invoices forever, and subscribe for more deep dives into the scams that prove the simplest cons are often the most effective. Drop a comment. Have you ever spotted a fake invoice at work? What fraud scheme should I investigate next? Thanks for watching, and remember, trust, but always verify.